Okay, so if somebody's buying a building, hypothetically for $1 million,
Nope, we're gonna throw that into total project. So it's $1 million purchase price, 300,000 fit out or upgrades. So now our total project goes to 1.3. Downtown Bristol is very hopping right now. I don't know if you've been there recently. What they've really done with the carrier buildings, it looks great. The nice part of that is, if you're there for 10 years, after you pay 50% of the loan, the other 50% is forgivable.
Yeah, this is Bob Warner coming to you from the Strike Zone Studios in Wolcott. And I'm here with Ralph Richard from the Community Investment Corporation. How you doing today, Ralph?
I'm doing great, Bob. Thanks for the invite.
We're glad to have you here, trying to find out a little bit more about yourself and your investment corp and what you do, and fill us in on all your loans from SBA to the Bristol Community Program.
Perfect.
Tell us a little bit about you and your background. And
Excellent, sure. This is my 41st year in lending, or assisting in small business lending. The first 40 years were with banks. I was with one bank for 20 years and then another bank for 20 years. I left there about a year ago. It was Savings Bank of Danbury, now it's called Ives Bank. And I was happy to jump over to Community Investment Corp. Last April. I did a lot of lending with them, the 504 program, which we'll talk about in a little bit. And it was a great fit for me to just concentrate 100% on small business customers and small business lending, and to really promote our communities and helping those areas. So it's been a great transition.
fantastic.
Yeah.
Fantastic. Put my glasses on here, Ralph. What's your, well, I guess your target customers are small businesses.
They are small businesses. Yeah, they have to be for profit.
Yeah.
We'll talk a little bit about our 504 or any of our real estate loans,
Yeah.
where those have to be owner occupied. We're greater than 51% occupancy, and we do check that on the appraisal for square footage. So that's our customer. And again, small businesses, again, for profit, and we even will look at some startups.
What's the territory you lend in?
I'm throughout Connecticut, but we do have another lender in Rhode Island. So we are in Connecticut, we are in Rhode Island, and we are in parts of Massachusetts. We're in 4 counties in Massachusetts, just over the Connecticut and Rhode Island borders.
You cover the Massachusetts area?
I do not.
You got another location up there?
Nope, our Rhode Island
Handles it.
lender does all Rhode Island and Massachusetts.
And Massachusetts.
Yes.
So you got a few different loan programs here. What's the first one's the 504? Tell us a little bit about that.
That's for real estate or equipment. It's a great program. It promotes small business. It promotes new job growth. The 504 program allows the borrower to do at least 10% injection, where we work in conjunction with banks. The bank will do 50% of the project. We will do up to 40% of the project, and the borrower is in for 10% equity. So it allows for the least amount of equity out of pocket. We want to have that money into the operating company to promote their business. It's a little bit different than the first mortgage, in that first mortgages are usually fixed rates for 5-year periods. Our rate is fixed for the life of the loan, and we can amortize up to 25 years. So we can go up to 25 years amortization, 25 years fixed rate.
Do you find when you do your SBA in conjunction with conventional that some of the conventional banks will give a longer term than if you're doing a 20 or a 25 year, not just amortization, but term? Do the local banks that you're working with tend to give a little bit more?
Yep, absolutely. They can do. They can amortize for 25, but their terms, every bank is a little bit different. Some will do a 5-year term where the rate will open after 5 years. Some will do a 10-year term where the rate reopens after 10 years. 7, depending what the market is hot at the time. Those rates sometimes are a little bit higher than the 5-year. And they sometimes will mature after the 10 years, 15 years, 20 years with a balloon, where We see all different. Every bank's a little bit different on their lending policy, but typically they're going to amortize for 25, and they rate reopen anywhere from 5 to 10 years.
So it really comes down to what their policy is at the time.
Yeah.
It's not really flexibility per se, knowing they're working with you. It's
Right.
just what their program might
Right.
be.
We usually, yesterday I was on the phone with a bank and I asked what their terms are because I produced we call a pricing model or a term sheet. You've seen those many times. The bank will produce a term sheet outlining, the rate, the amount, who's the borrower, where the collateral is, etc. So I add one in my pricing model, what the bank was offering. In this case, a very good question. They were only going to do a 20-year amortization, and we were going to do a 25, which was no problem. And they disclosed what their rate was, and I put it in my pricing model. What that does is allows the borrower to see what the first mortgage payment is, what the second mortgage payment is, so they can calculate, their cash flow.
And these are for both new and existing, and I'm assuming that
Either one, yes.
either one, if you're new versus existing, I'm assuming it may affect the amounts you can borrow or terms or what have you?
Yep, that's a great question, yes. If it's under 2 years, the borrower has to add an additional 5%. Remember I told you 10%
Yep.
equity, up to, minimum of 10%. So if they're under 2 years in business, this is the operating company, so they would put 15% versus 10%.
Yep. Okay.
Still doable, absolutely.
What's the length of time it typically takes to get these things done? Is it as cumbersome as it's been through the years, seemingly?
Well, it's a great question. We are probably, in every deal that I've done, I would say since I've been there, we've probably beaten the bank as far as an approval goes.
What does that mean, though? We're
We
talking
get-
60 days, 90 days, 120
We
days?
probably get ours approved in 45 days.
45 days.
Yeah, we do say to be on the safe side, when you're writing up your real estate contract, do 60 to 90 days as far as, due diligence with a decision from a bank with a commitment letter, and then, maybe up to 90 days to close.
When the loan's finally closed and the client's paying the loans, but they're making two different payments, one to the bank and one to the SBA provider?
They do. Yep. We have a bank that's our servicing agent, or in our region, and yes, they'll make two payments. Not initially, though, until we receive the certificate of occupancy. If there's a construction portion of the loan, or even if it's not, it's usually the bank will be taking the first and second position payment until we're taken out.
If there's a construction portion of the loan, is that funded through both the conventional bank and the SBA, or one or the other?
Oh,
or-
another great question. Nope, we let the bank do all that work.
So the construction, you're more the fixed part,
We're fixed, and
the bank
Yeah.
could be construction, which turns to fixed,
that's how it is.
and they have their own terms and inspection
Yep,
times and
absolutely.
releases and so forth.
Yeah, typically it's 12 months, but they want approval from us to know when this is all said and done. When they do get the certificate of occupancy, they want to know, hey, this SBA, the 504 is ready to go.
Right.
So again, they're going to be out there for a while at the 90% advancing
Right.
until CO. So that's a great question. That is the risk that the bank will take to be out there for 90%, which is usually is more than what is allowable.
Okay, so if somebody's buying a building, hypothetically for $1 million, and they're putting, $300,000 in tenant improvements in, and you're lending 5, and the conventional bank's lending 5, 3 of them.
Nope.
No?
We're gonna throw that into total project. So it's $1 million purchase price, 300,000 fit out or upgrades. So now our total project goes to 1.3. So now the bank's 50% of 1.3. We're 40% of 1.3. Your borrower is now in for 130,000.
Right. I guess I was using the example of if it was a million, we'll call it a $1.1 million project, and the borrower's putting 100 grand in and you're doing 400 grand and the bank's doing 6,
Yep.
within that 6,
Yep.
hypothetically 300 of that is tenant fit out construction money.
Okay, obviously you're going down that way.
So
All right, I see what you're saying.
they're kind of, they are going out there a little bit because
They are.
you're not. So they're close, but if they're buying the building,
Right.
and then there's fit out, and the bank goes first.
Right.
I don't want to confuse this.
Okay.
They got to buy it from the client first. You got to come up with all that money to buy the building.
Yep.
And then they got to own it before they do the fit
Sure,
out.
that's a great question. So at the closing, the bank will advance to pay off the seller.
Yeah.
And then the remaining funds are put almost in an escrow account. They're already approved. They're just waiting for those construction advances to come through.
Right. So your money and their money to buy the building.
Yep.
And my money, if you will.
Yep.
Go in and buy the building, and then the construction money's in a fund to fund the construction. So
Correct.
everybody's in up front.
We're not in up front. We're only in after the CO. So we're
How do they buy the building from the guy to they got to buy it first before
the
they can
bank's
do the
going to
fit out?
fund the whole thing up front.
Oh, so the bank gets paid back.
We pay the bank back.
Yeah, I got you. So
Okay.
if it's again $1.1 million and
Yep.
you're kicking 4,
Right.
the bank's lending the
bulk.
the 700 up front. They're getting
Correct.
back 4 from you.
You got it.
Gotcha.
After
okay.
CO, it's about 45-day gap.
Yeah, I'm with you.
After CO, we'll send them a wire for the 40%.
Gotcha.
Yeah.
So in the meantime, the customer's paying the bank
Everything.
everything.
They don't know. Yeah.
They're
they
paying
don't-
all interest on it till they get the CO
Right.
and officially
They know where we're
close them.
standing in the sidelines waiting.
Yeah.
We're already approved. We've
Yeah.
already reviewed the financials. We've already brought it to board. We
Yeah.
already submitted it to the SBA for
Yeah.
the credit, the
Yes.
appraisal, the environmental. So the bank is comfortable, the borrower is comfortable. Now it's just a waiting game. And this happens all the time, every day of our construction projects.
What happens if you're in a project like that and it's an existing location that a customer bought and unforeseen, expenses occur that are significant enough? Does the borrower have to take that all out of his other funds he may have, or
Nope.
is there any flexibility in financing that part of it,
Sure.
or
Yeah.
adding to the financing for that part of it?
They would go back to to their bank, and say, we were expecting 300,000 in your hypothetical situation, and it's got to 400,000. The bank will have to bring that back to show that there's debt service to cover that additional 100,000 or whatever the gap was that you're talking about.
Yeah.
They're going to call us up and say the same thing. Now, if it's within 10% of our dollar amount, we're not going to have to go back to the board. We're pretty good. If it's significant over that, then we're both going to have board approval and SBA approval. But it happens.
Right.
Yeah.
Has it ever
There's-
happened where you can't get it approved and the bank has to go all in on your 40%?
I don't.
Because you were kind of already locked into the deal.
Yeah, the bank can go over the 50% loan to value.
Yeah.
That's not a problem. I mean, they like using the 504 product because it's not going to be, they're not going to be at the maximum 80% loan to value. So anywhere between 50 and 80%, we'll just say we didn't get, your question is, we didn't get that additional bump approved. The bank could comfortably take that on themselves.
Right.
Yeah. So our loan amount is set in stone. They're going to go from 500,000 to 600,000 on their own. They're going to say, you know what, we're okay going from 50% loan to value to 55 or whatever.
Besides the benefit to the borrower,
Yeah.
to do a deal like this with both conventional and SBA, what's the benefit to the bank?
The bank has an asset in first position. We're in second position.
Right.
So now your $1 million piece of property that you're talking about, the bank has the first lien for the 500,000.
Yeah.
Or even if you want to go back to your hypothetical overage on expenses,
Yeah,
the 600,000. They're in a great place.
Yeah.
500,000 against $1 million.
Yeah, the only one that gets hurt is you.
Well,
Maybe.
Well, then it gets complicated. Yes. Do we have to take who's going to
Take out who?
Take out who?
You're going to take out the first to keep your second clean.
Exactly.
What are you going to do?
Yep. We have someone on our staff that does this every
You got to
day.
evaluate all that and determine whether it's worth taking it or not.
We do. Yeah.
Wow.
Well, the Treasury is going to get involved. So when the Treasury gets involved, after once there's delinquency after a certain period of time, then it's out of our hands, and they're going to look to liquidate and go after the owners.
Yeah.
Yeah. Nobody's going to run away.
Yeah. What's the SBA 7A?
Sure. Banks offer the SBA 7A program. All if you ever heard of Express or Microloans, they all fall underneath 7A. PPP loans, everything was under the 7A program. For us, we go up to $350,000. Unlike the microloan or the City of Bristol loan, where those funds have a fixed rate, the 7A is variable. But we could extend the period of time rather than 6 years, 5 years, 3 years. The 7A can go to 10, or if it's a piece of equipment or real estate, it can even go longer.
So they're variable, but you can lock the term into
The term will be locked as far as the number of years, but the rate's always going to be floating off the Wall Street prime.
the whole time.
Yeah.
Yeah.
Yep.
Yeah, it's a little bit more risky.
Well, right now, it's prime is 7.5, so we do 3.75 over that. It's 11 and a quarter.
Wow.
But if the company, the operating company, needs the equity, needs the injection, that's what the cost of doing business to do that program.
Yeah.
We see a lot of that with fit out, believe it or not.
Really?
Mostly, yeah. Fit out and equipment. It's really not. It can be for real estate, but it's that's a high rate to.
It's more fit out because they're trying to pay back that fit out portion of the loan.
And it's not owner
quicker.
occupied. It's your tenant. Your tenant can't pay to do the walls, the lighting, whatever it is. You say here.
So this isn't in this program. It's not a 50% occupancy thing.
No.
It could be a building owner that's doing fit out for a potential tenant.
No, the tenant would be our client.
The tenant would be your client. Your tenant borrows the money to build out his space within my building.
Yep. You give him a box and say, go have fun, do whatever you want inside.
So he's got a 10-year lease. He's got a 10-year schedule with you, and in theory, everything's paid off when the lease is up.
Yep. Or, we do, that's a great point. The lease has to be for at least the amount of the term. So,
right.
I got a 2-year lease, I want a 10-year loan with the 7A program.
Yeah.
That's not going to work.
Yeah,
it could be 5 with a 5-year option, which is 5, which is fine. But, it can't be less than the terms. Now, if it says, look, you, the building owner, say, I'm only going to do a 5-year term for this, at least for this guy or gal, then our loan can only be for the 5 years. And sometimes
so
that's the case.
It's tied into the lease.
It's tied into the lease, yeah. So really, equipment fit out is the big uses of the 7A program. Same thing with the microloan. We didn't talk about that yet, but we don't do any, as a business owner, you've heard of lines of credit. Our company, Community Investment, no lines of credit. We do strictly
a loan.
Strictly term loans.
Yeah.
Yep.
It's not, you're going to give me a line for 100 that I can go back and forth on for.
No.
It's at the period of time it's lent for.
Yeah. We could do working capital, which working capital is just an injection into the company, into the operating company. But it's not going to, like you said, it's not going to float. And I paid down $300,000. I want to borrow another $300,000. No. That's the number. As you pay down, it's not.
You're taking that whole thing up front. You're taking
the whole thing up front. Correct.
You're paying on it.
Yeah. Now, if there's equipment and fit out, we're gonna also monitor the fit out. Say, we're gonna advance as the work is done.
Right.
Your tenant says, Bob gave me a great building, and I need 100,000. Tenant fit out. Let's go. As you give us the invoices off of your contractor. Okay, the walls are done, the sheetrock is done. Here's an advance.
Are there any prepayment penalty clauses on those?
None of ours have prepayment penalties.
So they can pay it back sooner?
That happens quite a bit, yeah. They're doing better than their projections, they want to get it off the books. The rate is, like I said, 11 and a quarter on the 7A.
Yeah.
Let me pay it off.
Yeah.
And not all the time, but we do get calls for payoffs.
The microloans have a similar interest rate?
No, very different. That's a fixed rate for 10% period.
Ah.
Yeah, anywhere from 3 years to 6 years, depending on the dollar amount, how long you've been in business.
Is that we're talking 10% now because of the climate of rates right now?
Yeah, we just happen to have
it could be less if the rates went down, or
we haven't seen that much of a shift in that
In
rate.
rates.
Yeah, because the prime has been hovering right around there for a while.
Yeah.
We don't base it off of prime. We base it off of our costs. I mean, that's estimating what our costs are to be to pay our bills as well to make that product somewhat.
so it seems like the
profitable.
504, right?
Is our bread and butter.
Yeah, that's the one because you're talking 5%,
What do you mean?
5% interest rate. I think you
No, right now, every month the 504 loan we get the pricing rate from the that's sent to us. Right now, if it's under 500,000, it's 6.28.
said. Right.
Over 500,000, it's 6.8, I believe.
So it's still
6.68.
considerably less than the SBAA or the microloans.
Absolutely, but that's more real estate and that's long term. Yeah,
Right.
Yeah, that's to promote the economy. That's to promote job growth. That's promote the small business in our community. So
Yeah.
they all are, but that's specifically the 504.
Yeah. What's the City of Bristol program?
City of Bristol, sure, we got involved in that over a year ago. The City of Bristol put away a fund where if you're in the City of Bristol, you're a small business, you can partake up to $50,000.
Yep.
If you're in the downtown area, they'll also put a 25% bump on top of that. So again, promoting not only Bristol, but promoting the downtown area. So if you're in business less than a year, you can do $10,000. If you're in business up to 5 years, you can do $25,000. If you're in business over 5 years, you can do $35,000. And then if you're a restaurant that's staying open till 8 o'clock for 4 nights or greater in the city, or you're a business that's adding 2,500 square feet to a building or a new construction of a building, you can go up to the 50,000. So we're seeing a lot of restaurants taking advantage of that. Downtown Bristol is very hopping right now. I don't know if you've been there recently. What they've really done with the carrier buildings, it looks great. So that's what that fund is all about. The nice part of that is if you're there for 10 years, after you pay 50% of the loan, the other 50% is forgivable.
You paying, I think I saw in here there was an interest rate, I forget what it was.
5%.
5%. So
Yeah.
hypothetically, if you're borrowing 100,000, besides your principal payment back on the first half of it.
Yep.
Is that payback amount based on the
Principal.
principal of the first half, or
Correct.
and then the interest rate you're paying back? I'm assuming the interest is
On the whole thing.
on the whole thing.
Yeah, so once you pay down to 50,000 on that, it goes into hibernation.
Right.
It's not, there's no payments to be made. We're going to continue to monitor it.
But it's not like when they're looking at your repayment schedule, your monthly payments.
Right.
They're not calculating that on, hypothetically, if you're borrowing 100,000 on the $100,000 principal.
No.
The interest, yes, but the principal portion they're calculating on 5 years of that 50%.
Nope, we're underwriting on the whole thing. We're underwriting on the whole dollar amount of the loan.
So
If
both
it's for-
interest and principal.
On our underwriting calculation, correct.
Yes. So
Yep.
so if 100,000 was 1,000 a month in principal and 50,000 was 500, you're going to pay the $1,000 a month on the principal and whatever the 5% interest was
On the whole
until you get that 50% paid off. 50%
Yes, that
paid
is
off.
correct, yep. It's principal and interest on the loan amount,
Yep.
whatever it is, and we're going to underwrite on the loan amount for the full percent. Then, after they're there for 10 years, again, it doesn't matter when that 50% is paid. It can be paid anytime from 6 months after. So you've had the loan for a year, and you say, you know what, I want to pay down the rest to get to the half point. It goes into hibernation.
if you're a company that, I saw in here where was to assist in home-based businesses graduating to a commercial location. So, you could be a home-based business that just opened up, or maybe it's been in business for X amount of years. It's got to be a home-based business that's location is Bristol.
Correct.
Right? And you can still, they can still qualify for this program as a home-based.
Yeah, I haven't seen any home-based business. More the ones I've only seen have been in had a business location.
So they're saying they're there to assist a home-based graduate to a commercial location,
Correct.
but you haven't had any happen like that yet.
The ones that I've happened, we're in business, we're a startup that was moving to a location in downtown, a restaurant in business, a manufacturing in business. So that's what I've seen so far.
So if it was a business that had a home office,
yep,
and they're looking to move to an office location in Bristol from their home, even though they haven't done it yet, they have a business plan that shows they're going to, in the next 6 months or whatever, rent a location in the city of Bristol, because their current office is in Bristol at a home. They still could qualify.
Right, even if they were in a home office in Farmington and they're coming to Bristol.
Okay.
We've had that question. We've had that, just recently had that where they weren't in Bristol, but they were coming into Bristol.
Okay.
Qualifies. And again, it's really just three things. It's for the fit out of the unit, equipment, or real estate, again, if it's going to be adding that 2,500 square feet or more. Not working capital, not line of credit, not inventory, nothing like that.
If they're in another town, and they want to open a second location, in Bristol,
good to go.
Good to go. So you could be from Wolcott.
Yep, we just had something similar to that.
Right. So you're showing that, and my business plan is to have my offices here and my whatever. Manufacturing here.
Warehouse.
Yeah.
It's just the city of Bristol. They want to promote Bristol.
Right.
So that's what the town came up with, and great for them. I mean, I don't know of any other town that's doing this. So
if it's for tenant fit out. Equipment, and what was the other thing?
If they were going to add to an existing building of 2,500 square feet.
So let's just say it was equipment and build out.
All day long.
Does it matter, hypothetically, if they're borrowing $10,000, do they have to show that 5 is for fit out and 5 is for equipment or whatever?
Sure. Because we're going to advance. Once the equipment is purchased, we're going to do a check for that, and we'll say the fit out's going to be in stages. Like we're saying, the walls are up. Here's a check for $2,500. Here.
Right.
Now the painting, electrical, and plumbing is done. Here's the rest of it.
Right.
Now you're all set and done.
So if they had $2,000 in fit out and $8,000 in equipment, they just have to show the receipts for the $8,000 worth of equipment.
Absolutely.
And you'll pay out on that.
Correct.
Gotcha.
City of Bristol, it doesn't matter how long they've been in business, startup or whatever, always a 10% injection. There's not 100% financing.
Right. So if you're borrowing hypothetically 10, you got to show you're putting $1,000 in.
Exactly. Yeah.
So that $1,000, can the borrower choose whether he's putting it into fit out or equipment?
Doesn't matter.
Doesn't matter?
No.
So if he
once the 10% is in, the rest is covered.
Okay. So he's putting his 10% up front. So if he borrows
simultaneously.
Okay.
Yeah.
So if he's if he's borrowing 10,000, he's got to have 1,000 more himself.
We do look at that,
right?
Yes,
and if he's buying, $9,000 worth of equipment, as an example, he's showing that his $1,000 went in. You're funding the other 8.
Yep.
And the 2's still sitting in the kitty for when he rents his location for fit out,
Yep.
etc.
Absolutely. Yeah.
When we say equipment, I mean that could be office equipment, could be whatever.
Which we're kind of very flexible on that.
Yeah.
I mean, yeah.
They got to have a business plan before they come in to show all this, I assume?
Nope. Not if they've been in business. No, if they've been in business, we're just looking at, we're underwriting similar to the microloan. We want to see tax returns. We want to see personal financial. We want to see a credit score that's over 675. You know, we can't have any recent late payments. We want to see that they've paid their bills on time. You know, their debt schedule. We're going to see what their debt schedule looks like. They can't say, oh, you know, I've got a line of credit with Webster, but I haven't been paying them. They're suing me. You know, something to that effect.
They got to have 3 years tax returns if they're existing? 2? They need to show profitability of any certain percentage?
Well, startups can't show profitability. They haven't been in business.
Well, startups, yeah. But
So-
if you're an existing business that
Well,
was in business for 2 years and you're trying to qualify here,
We're gonna. That's
and you've not made any money in 2 years, or maybe you've had write-offs because you've really a startup for those couple of years.
Yep.
How does that affect
good question.
their ability to qualify?
That's a very good question. We're going to look at the debt service coverage. We want to make, just like when you apply for a car loan or whatever, and you went for your house on a personal side, we want to make sure your income is, you know, greater than your debts on a debt service coverage ratio.
Right.
It doesn't cover, like you said, it doesn't qualify. What's been happening in your business? Well, like you said, I may have just started out a year ago. I was only selling apples. So now when I get my new location, I'm selling apples, oranges, bananas. So, oh, are you? Well, let's see on
Projections.
Let's just see your projections. This is where you were.
Yeah.
This is where you're going to go. We're going to look more at where you're going to go than where you were.
Same way as if it's a new startup.
Exactly.
You're looking at their business plan.
Exactly.
What services they're providing, what they're projecting for income.
Yeah.
Over how long of a period? If they're new,
2 years.
they got to show a business plan and a projected for a 2 year period.
Correct.
Okay.
Same thing with the microloan. Same thing with the 7A, where we really follow a lot of the same.
And I assume they need to provide you with their tax returns, etc. That after that year, if they've given you projections and what they provide you, they're paying their loans, you know, they're paying everything.
Right.
But what they provide you hasn't hit their targeted business plan.
We will have a conversation if that's the case. Say I'm going to do $500 million in sales, and you did, you know, 5,000. Where'd you come up with? One X, and now you're not even, you know, you're not even in the ballpark.
Yeah.
Well, you're not going to believe it, but this happened. Okay, well, we'll have a conversation. You know, the loan is continue to pay, so again, we're going to monitor. We just want to make sure that individual company is not getting over its head too quickly without us knowing.
New business, you're not going to have any tax returns. You're going to have a business plan. Do you need tax returns of the principals?
Always. So for all the loans that we talked about, it's 3 years, 504, 3 years, 790, 3 years, microloan on the personal side. On City of Bristol, 2 years on the personal side, 2 years on the business side. If they've been in business for 2 years.
So if they haven't been in business, you're looking for 2 years of the personal, the principals.
Yes, yeah. And we do times, sometimes see, I'm going to be running a new business in Bristol, a flower shop. It's going to be open from 3 o'clock in the afternoon to 8 o'clock at night. Well, what do you do before then? Well, I'm a teacher, so that's why the tax returns come into play. Oh, so your present job has enough income to take care of your personal debts. Yeah, so this is just a second business for me. So that's why we like to see the personal tax returns. Now, they could say I'm all in. I'm starting this florist shop.
Yeah, I'm not gonna. I'm just
quitting.
retired. I'm
quitting.
I'm retired I'm retiring as a teacher, and I want to just do this.
Right.
I'm all in. Now they don't have the income there.
So now we got to make sure the projections are you projecting that you're going to have enough to not only pay us, but to continue to live in your house, to pay for your car, to pay for your taxes, etc., food, you know. So we want to make, you know, sometimes we'll see, well, yeah, my personal expenses, food and utilities are $300. We're like, no. Let's go back and take a look at this. So a lot of times we will assist in the projection.
So if the business if the business has owners that have day jobs,
Love it.
that don't need the income of the business, they're starting this up to build a business, and at some point potentially rely on that.
Correct.
They're looking to build this thing first and not be a personal strain on it. They want
Right.
They want the business to be able to carry the business
Right.
during its time.
Right. But
Right.
it's a much easier presentation for me to my board to say, Bob's going to continue to be a teacher or a painter. He's starting a florist shop or a barber shop, 4 o'clock in the afternoon to 8 o'clock, if that's the case.
Right.
Or he's retiring. We have enough in the projections. He's got enough.
He's got Social Security. He's got
enough,
investment funds.
He's got enough. To cover his personal expenses. But now the business. I mean, these loans are not that high. I mean, we're
Right.
only going to 50,000. So
Yeah.
over what's the
Yeah.
payment over 10 years?
Yeah.
6,000, 6,000. Can somebody cover that?
Yeah.
Yeah. I mean, we got to show. They might say, we're gonna start off doing 5,000 a month in sales. We're hoping to make 2,000 a month in profit. Well, whatever.
I assume you.
But that's not the case all the time. We have manufacturers that are doing, fantastic in sales. We see A to Z in City of Bristol.
Yeah.
Same as microloans, same as 7A.
You see it all.
I don't know what I'm going to see. I get a call every day. One of the questions were what kind of the industries we're looking at. A to Z, healthcare, restaurants, daycare places, food manufacturers, landscaping, everything. We see A to Z. Yeah. So in all, for every one of those loans.
And I'm assuming the guarantees on that are both corporate and personal.
Correct.
So the Bristol or the City of Bristol.
The Bristol,
funding
there's no corporate guarantor because the borrower is the corporation. So the operating company is the borrower. They're already on the hook, but the individuals
Personals are guaranteed.
Correct.
Yeah.
Correct. But
Yeah.
unlike the 504,
Yeah.
there is corporate guarantors because very seldom do you lend to in real estate. I'm telling you, Bob's real estate. And
Most of the deals I've done have required both.
Correct.
But you're saying, when I say both, by the way, I mean corporate and personal.
Correct.
What you're saying is with the 504, it's corporate.
Yeah, because we're gonna lend to the real estate entity,
right,
with the operating company as our, as our corporate guarantor, with you as a personal guarantor. I should have brought water.
I know we have more to a little bit more to go over here, but as you know, I've known you for a very long time,
right?
Both with SBD and whatnot, and one of the things I've really enjoyed doing business with you, and we've done different loans, is that I can always count on what you're saying.
Thank you. Yes.
Okay, and for people out there, that's like,
yeah, I'm a straight shooter.
You're a straight shooter. You're just telling it like it is.
Yeah,
it's ABC.
My goal is to get the loan done.
Right.
My loan is not to say, maybe, hopefully, someday, possibly, I could help you do this loan. And now 3 months later, Bob, I forgot to tell you that we don't do those. We don't do loans to,
Yeah.
Like the last couple of questions.
Yeah, I just had one other question.
Sure.
On the really applicable to all the loans. If a client comes in and he's got a 10 or it's amortized over 20, whatever. And 5 years from now, he's looking to do something more. He's looking at an addition on, or buy a piece of equipment, or is it difficult for him to I don't know whether it be increase that loan or add to that loan, or how's it work?
For equipment, we would just do specifically for that piece of equipment that they were buying.
Yeah.
If they were in this unit and they were going to expand to that unit, they wanted another fit-out loan for a 7A loan or a microloan.
Yeah.
This will continue to be in place.
Yeah.
Let's start up a new one over there. For a 504, we could always do a 504 behind ourselves and say, look, we want to do an addition. Now, also, the 504 allows for expansion refinancing. So there's all different terms as far as and regulations I'm in a building that's $2 million. I have a $2 million loan on, and I want to build another one that's $2 million next door. That is refinanceable for the first one, or we'll find out what the rate is. Maybe it's better to do two, but absolutely, there's no.
But all the same rules apply. He's got to get a conventional loan to give him
Yes,
60,
we're always in with a
you're 40.
Yeah, for the
and
504 rows.
so whatever he's trying to redo, he's going through that process. But
Right.
it is they're not locked in, so
No.
to speak, where they can't do anything. There's flexibility to it.
Yes. Again,
Okay.
I'm not putting down banks because I was in banks for 40 years. We do see at times where they will go to their bank first and then they'll call us and say, remember we did 515 Wolcott Street, what happened? Well, we were dealing with X bank. They don't want to expand with us. But would you? Yeah, you're looking to do another, a $2 million loan on top of the $2 million you have. Ralph, I'm stuck. What could I do? We then start dialing for dollars. We'll start calling a couple of our banks that are in the area. This happens all the time. Hey, look.
So it's not just the client bringing a bank in. You find the bank that might fit.
Correct.
Along with you for the client.
Sometimes we get called first.
Right.
And we still have to work with a bank.
Right.
Which bank may be the perfect fit,
Yeah,
well,
you have a better feel for what
Yeah.
banks will fit that project and that
Yeah.
loan amount.
Right. We have certain banks say, look, I'm not going to get in that industry. I'm not going to do restaurants. I'm not going to
Yeah.
do hotels. I'm
Yeah.
not going to do ground up construction.
Yeah.
Whatever.
Right.
Oh, no problem.
Right.
And the banks will refer to each other as well. I mean, the bottom line is we're trying to help the small business owner. We're trying to help our business community.
What's the CIC Technical Assistance Program? What's that?
That's a great question. We have a person on our team, Joe McCaffrey, for when we're doing our microloan programs. A lot of times the client is a little green as far as, how am I going to do marketing? How do I handle QuickBooks? How do I handle credit counseling or whatever? Joe will then determine where's the best place that he could assist. And we have consultants on our list that we'll use and say, I know you need a little help with Excel, whatever, and doing your internal management prepared financials. Let's get together with such and such, and that's a free service that we offer.
So this is really a service that you offer.
Yeah.
Does that qualify to all those programs? Or?
Microloan.
Microloan only. Okay. So you got a free service that can assist the client.
Yeah. Again,
or the
it's
borrower.
their option. They're like, a lot of times they'll come in. Can you help us with marketing? Can you help us with online advertising? We don't know what we're doing. We're kind of stuck.
You happen to know a company that
happen
does
to know
that.
a company that does that. Exactly. Yeah.
Well, Ralph,
So that's where I think I could maybe benefit for you on that line.
yes, yeah, bringing clients that.
Yeah.
Yeah. Again, I'm Bob Warner from the Strike Zone Studios in Wolcott. You ever want to reach me, my number is 203-982-3481. And Ralph, I don't know if you said where your office was located or your contact info.
I was hoping you were going to. Yeah, I'm on 2315 Whitney Avenue in Hamden. You can get us. You can email me, or you can call me on my cell. Give you both. rrichard@ciclending.com.
Let's see. Richard at, what was it again?
ciclending.com.
Yeah. Yeah.
Or my cell, which I keep on
Yep.
7 days a week, 203
Yep.
560 7690.
Ralph, it was a pleasure to sit down with you as always.
Same here.
I don't know if I missed anything. Is there anything else you think you'd like to add to
No,
it all?
I'm going to
or-
give you our website too. www.ciclending.com.
www.
You could get a lot of information about
CIC
correct.
lending.com.
Yeah, you can get a lot of information of the same products that I talked about here today.
Yep.
Mike, I have one question to you. Were you ever a lender? Because you ask great questions.
Well, we've done a little bit of lending. Experience with buildings and
You've seen A to
land
Z.
development and
Sure.
in all types of markets.
Yeah.
I think when we first got together, it was one of those. I don't know if it was a better or we started out in a good market, then went through a bad market, and then came back to
Right.
we're back to a better market. So yeah, we've done a lot of different lending, and what I found is every bank sometimes is a little bit different in terms of what and how they do things.
They do. They all have different temperatures. They could be hot on one thing at one time. They could cool off in certain areas. Rates are not set in stone.
Right.
Fees are not set in stone. What we're seeing with our commercial partners, commercial banking partners, everything is about the total relationship now. What are your deposits? Do you need credit card services? Do you need cash management? That type of thing. So, been there, done that for 40 years. Now I'm just doing my.
I got one question.
Sure.
We're still on, I hope. With all the crazy, internet, whatever, are you seeing any bad actors that get into people's loans or,
You mean like hacking?
Yeah, hacking into.
Well, everything
stuff.
we do, everything we send or receive secured emails.
Right.
Of course, there's all firewalls that we have from our IT company.
Right.
We have not, knock on wood, but yeah, every once in a while you'll see, St. Mary's Hospital, Waterbury Hospital,
Yeah.
other patients'
Yeah.
confidential information got hacked from a certain year. No,
See, now that you're all over the world, they'll be coming for
they're
you.
going after me. Yeah, no, but we have all kinds of securities in place for that, and I use two different secured website services for sending and receiving documentation. Yeah, anything that has any bit of confidential information
Yeah.
on it.
Yeah.
Yeah. And we were continuing to do training on that too. I just went through one. We're always keeping up on, the scams, sadly.
I meant to ask you, how did you get involved with this? You went from banking.
Right.
Well, this is banking, but
Yeah. Well, you
it's
see,
lending, I should say.
Yeah,
You were lending and banking, etc. How did you get here?
Sure. Great question. You see the 504 program
Yeah.
that I've been talking about?
Yeah.
I used CIC as my CDC partner.
Gotcha.
CDC is that's what we are. We're
So you had lots of contact with them because you were the
I
bank.
did.
And they were the SB.
I was a 50. They were the 40. Yeah.
Yeah.
And we're a CDC. We're a certified development company.
Yeah.
So all throughout the United States, there's certified development companies. You have to be certified and approved by the SBA to do 504 lending. Not every you can't just say, oh, I think I'm going to start doing this. You have to go through very, very rigorous certification with SBA to make sure, because you are underwriting for the SBA.
So you had to go through that whole process.
CDC did 51 years ago.
Oh.
Yep.
What did you have to go?
CIC.
What did you have to
I
go
did have to get screened. Of course, you can't have any derogatory information of your past. Yeah,
But there was training programs or anything like that?
I did. I learned something new every day. Yeah. And there's constantly changes to the SBA programs. If you've been following, recently they've increased their fees with the new administration. So constantly we're getting updated information from different partners that we use all about SBA lending, SBA policies, and we continue to do ongoing training for that. But
So you're basically the retired colonel in the Marines that went to work for the defense
no,
industry.
I'm working 24 hours a day. I love it. It's laser focused.
Good.
Yeah.
Good.
Yeah.
Well, it's been excellent to sit down with you again.
Oh, same here. Thank you.
Really good.
Okay.
Enjoyed it.
Thank you.
Hopefully
Okay.
it It's been beneficial for you and your customers.
Absolutely,
It
yeah.
has been for us and hopefully our audience.
It's always great to talk about what I like to do and, constantly talking about the programs that we use. So,
Well,
appreciate it.
we'll do it again soon.
All right.
All right?
Thank you. Perfect.
All right.